Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So let's do my own version of bull bear on BTC and ETH since I missed both videos last week. Normally when I don't know what's going on, I do a lot more analysis than when I know what's going on. So what you'll see in this video is a lot of information. It's not my job to trade your book, it's everyone's job to be informed. So I'm just going to talk about some stuff. This isn't necessarily how I feel about anything personally, how I'm trading anything personally. I'm just showing people this is what I'm looking at, this is what I'm seeing, this is what I'm hearing, the general zeitgeist of what's going on in Twitter and financial higher publications that discuss crypto. Okay, so you may or may not like some, most, or all of what I have to say, much like I do on everybody else's analysis. But that's not really the point. The point is it may help you see something in a different light. It may help you understand something that you didn't before. All right, so let's get right to it. So last week I did have a BTC and ETH article. Lots of stuff in those, as always. At the end of this one, I was showing rising wedge with the pullback to 7K. The 7K to 6.4 surprised me a lot. To see that just complete lack of bid support just showed me again that we're in a bear market more than I like to realize. In a bull market, when we see this, it's just a mean reversion and continuation. In this market, it is sell everything you've ever owned market sort of move. I want to move to this crypto Bloomberg report. As usual, I'll put everything in the description below. There's going to be a ton of links for this one. So if you're bearish, everything in here is great. If you're a crypto bear, this is what you want to see. You want to see, they discuss volatility, they discuss inflows, they discuss NVT, they discuss DAA, daily active addresses, they discuss inflation. All this stuff is all pointing towards bearish. They're saying inflows are higher than what expenses are, so there's more coins being produced than money coming in. They're saying that the rise in Tether is bearish because you're seeing more people move out of crypto and into a safe haven asset. They really like Tether. They say it's bullish on stable coins, not necessarily bullish on crypto in general. So definitely take a look at this and really try to understand what they're trying to say, even if you don't agree with any of it. Again, DAA they talk about here, they talk about NVT, supply pressure. The same thing for ETH. Here's NVT. There's certain things that I really don't agree with them at all on, but that's up to you, what you want to talk about or what you want to take in. They mentioned that coins, newly minted coins has a bearish effect on Bitcoin, which I don't agree with at all. But yeah, just something to look at. And then for ETH, they talk about how ICOs have essentially dropped off, and I'll get to that later on in the video. But again, inflows are not keeping up with, or the monetary buy side is not keeping up with the supply pressure. That's apparent on several regards. One thing that I keep going back to over and over again is hash rate. Why is hash rate going up in Bitcoin? What's going on there exactly? Is it sunk costs for people who bought and are now putting this stuff online? Is it new miners that are more efficient that are coming online, replacing older miners? Is it the big miners trying to squeeze out the little miner? In general, we've had very few drops in difficulty over the past few months, even over the past year. In both instances, we've had a giant spike in price following a difficulty drop. So that's weird. I don't really know what that means. If there's a mining profitability correlation between miners who are selling to support overhead, I don't know what's going on there. So let me know in the comments what you think, but that's just some other stuff to think about. All right, again with the FA, let's go with financialization of Bitcoin. What if the ETF is bearish? Something to consider. Caitlin Long talks about that. There's a great podcast with Trace Mayer and Caitlin Long. Definitely give that a listen, even if you hate both people or disagree with everything they have to say. Okay, it'll help you understand what everyone else is at least thinking and talking about. here's her Twitter as well. She talks about this Bakkt stuff, which, again, bullish or bearish, I'll leave that up to you to decide. Nick Szabo also thinks the ETF isn't going to be as bullish as everybody thinks it is. Like I said, we have this Bakkt thing with their Jackson Pollock website for some reason. Institutional custody liquidity. They basically addressed the Caitlin Long concern about negative effects of financialization, where they're lending out the BTC reserves, creating some sort of fractional reserve. They say no. We'll see what actually happens. If we move on more to the ETFs, they were denied, then they were undenied, and now they're just in limbo. And we've had a recent non-news suspension of some ETN confusion product that, based on who I've talked to, they don't think it has any effect on the approval or disapproval of ETFs. And then just recently, we're also seeing Citigroup planning some sort of what I'd consider pink slip type thing, like Grayscale's fund. I don't know. I don't really know. But give that a look. So all of this FATLDR sums up to uncertainty, I think. It's certainly more bullish than bearish. We're not seeing companies say, no, we don't want to do custody anymore, or no, we don't want to do this. There was some report about Goldman that who really knows what it meant, whether or not they're decreasing trading, whether or not the report was accurate, or it was more nuanced than what people were leading on to believe. I don't know. So let's get to the charts, something that I'm certainly more comfortable with, just because I'm a noob, and noobs like TA more than FA. So I've kind of mapped out Q4 since 2013, and on balance we've seen large moves, barring this one, almost perfectly within Q4. If we include this drop, it was actually minus 50%. So I think the conservative move here for Q4 is 50%. 50% drop would bring us to 3K. If you're bearish, which is yearly pivot, arguably some sort of fib line for the descending triangle. If this is a descending triangle, I'll get to that. If we're talking about bullish targets, it's basically previous all-time, not previous all-time high, but previous local highs, which match the Wyckoff thing. I'll get to that. So all this is queuing up for a giant Q4 bullish or bearish, and the TLDR, TLDW for all this is going to be, per usual, patience will set you free, in that jumping into something before the triangles break will probably get you chopped up, unless you have a wide stop in one direction or the other. So I'll talk about that some more. We'll break that down. Okay, so if this is a falling wedge, now people who aren't drawing it as a falling wedge include Fundstrat, Thomas Lee's group, Peter Brand, and an unnamed institutional guy that I talk with on a regular basis. All of those people draw this as a descending triangle, except me. Okay, so maybe it is, maybe it isn't. I will map that out if it is. Again, I'm not saying one way or the other. Obviously, I'm more bullish than bearish personally, but trading it correctly is more important than your personal sentiment. So if this is a falling wedge, triangles typically break when 3/4 full or greater. And if you sort of take this to the end point, we're talking October 4th-ish when we reach that point. If triangles fill in till 80%, there's an even greater move based on what Bulkowski, this guy, who's like the pattern captain of the world. So based on his charting, that's what he's found. So if this continues to consolidate, it makes sense. If the coil continues to wind up, the explosion is going to be that much greater. If it coils till here, it's still going to have these targets, upside and downside. For the most part, falling patterns have a bullish bias. Maybe that's why I'm drawing this as a falling wedge. I have a personal bullish bias. This fits in with Wyckoff accumulation-ish. There's got to be some point, where even I say to myself, these multi-spring thing doesn't make any sense. I don't know, we'll see. As always, this wasn't necessarily where I think price is going to go at the exact time, but just the roadmap of what's going on. Some other nuances with these triangles, Bulkowski says on his website. If it has an upward pattern of volume, arguably it does. It's certainly not descending strictly. That these tend to have a bullish breakout more than not. You can read that on his site. Again, I'll provide all the links below. He also has different measure rules for patterns. So for falling wedge, it's this or this, bullish or bearish target. Basically the same as this Wyckoff target, around 11, 11.5, somewhere in there. That may not be reached within Q4, it may be really reached within Q4, I don't know. That would be above an 80% increase from where we are now. I think this was the 80% mark and this was a 60% mark. So we'll see what happens. But the downside on a falling wedge breakdown would be this based on his measure rule, 4,200, which is kind of within the previous zone of messy consolidation. It's far above the yearly pivot of the S1, which is 3K exactly. I measured this as a 7K breakpoint and a 6K breakpoint, and I think that's psychologically where a lot of people are sitting anyway, so it just sort of makes sense. So again, read his falling wedge page. It's pretty nuanced. He goes into some stuff down here. This is the map out of the if it's a descending triangle. So if I use my traditional like measured move thing, I get real messy numbers that don't really make any sense. You know, I get numbers below zero, for example. I get a 1618 of around 1300 on the downside. Doesn't make too much sense. Certainly possible. Anything's possible. We can go back to previous all-time high. I don't really see that happening. But again, if we look at the triangle at 3/4 full and 80%, those are the expected times when we're supposed to move. Again, this is Q4, something else to pay attention to. We've seen a giant influx of money generally in Q4. We've seen the largest moves, I think, in Q4. So we'll see what happens in Q4, but I'm bullish on Q4. Okay, so if I use his measure rules again, I get basically this previous downside wick as a low target, and basically the high of the descending triangle as the upside target. That probably overshoots, but in reality what would happen is a wick to like 13K and then we come back down to 11K, if that happens. The same with this, you know, maybe we get a wick to 1300 and we bounce real quick to 2K. Certainly viable. I expect rapid movement throughout the quarter with a FOMO or capitulation wick towards these extremes, and then sort of mean reversion-ish back to 11K or 3K, 2K, 1300. This whole zone is a big mystery, depending on how it pans out. Nobody's talked about this on the weekly. This is potentially following 3 methods. I'll let you read about that. Basically, it's a candle, 3 up candles, and then a down candle that breaks the previous low. Arguably, again, not perfect. Could be there. Represents bearish continuation. Something to look out for. I'm not going to go into detail too much on this, but if it is a head and shoulders, again, you're looking at the 6K psychological support. You're looking at monthly pivots. You're looking at a potential throwback after breaking down to 6K at the neckline. The shoulders don't match. The profile isn't descending. It's nothing. The zone is between 4 and 4.7, technically. Something to watch for. I think if we break 6K, it's not good. Now, there's also a 600 EMA on this neckline, basically supporting everything, which is another reason to watch this area closely. You'll notice this is the 3-day chart, but it's a 200 EMA, so it's 200 times 3. And then if we do break down, your stop loss is 7,300. So ideally you short the breakdown and then you take partial profit here, you add here, and then you take profit all the way down here below 4.7. Look at the 2-day 5,200, kind of difficult to see, but we're getting a bearish cross for the first time in 3 or 4 years. We're getting a Kumo denial, as well as a Kijun bounce-ish, as well as a tweezer top, all in hindsight, but it was part of the package of the rising wedge, and potentially part of the reason why we dumped as hard as we did. Kind of odd how all of these zones have been super bipolar. Just massive lack of liquidity in these zones between 6.2 and 7.5. Just very strange. I don't really know how to read that. If you look at this bearish pitchfork, with the daily 250, 200. You can see we basically broke down from the 200. We broke down from the pitchfork maximum diag. This says we're likely to test the median line again, which is below 6K, which would mean all the bearish targets that I just talked about would be more likely than not. There's some weird potential harmonic here, like a bullish butterfly, bullish Gartley thing. I didn't draw it. I'm not a big fan of harmonics, but if we break 6K, it's something to consider. It certainly fits within the pitchfork boundaries. The 1618 is like down here. It's too much of a mess to really draw. Daily cloud, we went right in this divot, broke down. I mean, I was and still am thinking 7,900 based on the flat Kumo here, but you can't be bullish on the cloud litmus test, which is prices below cloud, you're looking for shorts. Prices below 200 on the daily, you're looking for shorts. End of story. All right, let's talk about ETH real quick. Again, check out the article. A lot of stuff in there. A lot of people, probably everybody, is watching what these ICOs are doing. They are the largest holders publicly of many wallets of large coins. So we're looking at 4% of total Ethereum held up. Whether or not you think it's bullish or bearish, I don't care. I'm just saying this is how it is. You can see there are 7, I think, above 200K ETH. They have lots of control. The other thing about ETH right now is the inflation backdrops, that there's just massive selling pressure based on that. Whether or not you believe that miners just market sell immediately, I personally don't. A lot of people do. Something to consider, it's supply pressure. To me, buying ETH right now and holding is like playing a character that is going to get a buff next patch. It's like, why would you play that character if you know they're worse than everything else based on the buff they're getting next patch? I don't know, just part of the mindset. If we compare that to like Bitcoin's monetary inflation, I'm not trying to say Bitcoin's better or not. I mean, it is, we know that. But if you look at Bitcoin's inflation, it's around 3.8. After 2020, it's set to drop to 1.18-ish and then just continually go down from there. But Bitcoin's inflation isn't that great either. If we look at just US inflation, around 2%. Just something to think about in the back of your mind. And again, like I said, funding for ICOs have dropped hard in the past 16 months, and arguably that was what was capturing all of the bullish sentiment. You know, people buying to buy ICOs, and then ICOs were essentially locking up the funds, and you know, then you're stuck with this monster ICO thing where you're holding all this ETH that basically has been improperly managed for all these years, at least 2 years in some of these coins. The other part that not enough people are talking about, I think, is the lack of straightforward thinking and or foresight by the ETH team regarding monetary policy. I go a lot into this into the ETH article I wrote for BNC, but yeah, decreasing inflation is bullish, but I'm bearish on their inability to see this coming. So again, I don't know how to read that, but that's just something to consider. Overall, ETH has traded extremely technical since May last year. You know, we had this ascending triangle, broke up as expected, head and shoulders, broke down, hit the target, inverted cup and handle, hit the target. We have a bear pennant. Arguably, the target is now around a 110, which is a previous wick. So things don't look great for ETH, certainly, especially with the overhang of large holders basically burning money daily, just sitting on it. We are seeing an uptick in volume, which is bullish from a capitulative standpoint, but I think overall, until we see volumes in this nature up here, we aren't going to see any clear reversals. You want to see panic if you want the bear market to end. You want to see a giant wick like this. You want to see just panic FOMO. Like, you want to see your bids between 50 and 100 get filled on some random exchange with a thin order book. Just like other cloud stuff, the 6 hour was bearish when it failed to reach the target. All edge hedges have a stop loss of below cloud, below Kijun. So as soon as it broke 280, that target was kaput. It certainly had a chance based on the cloud 6 hour to mean revert back to 350. I still think it does. I think we're going to see a massive, quick response when everybody's sure that things are headed in the right direction. I think we'll actually see that happen before October 30th because people will start to front run each other in a way, in the expectation that things are better on balance. But I don't know, ETH is in a tough spot. Another reason why we might see this quick mean reversion is because of shorts at all-time high. The question is this the new normal? We're still net long. There's still plenty of ways down for these longs to go. So it's kind of both sides. You could just see spikes in either way. I mean, what I'd love to see is spike down to like 150 or less, a bunch of longs close, panic, shorts get added, and then we get a massive bounce. Shorts panic close, longs get added. I mean, that's, I think, where we're headed with this setup, but we'll see what happens. If you're bullish, you're looking at high time frames, you're looking at the spinning top, tweezer bottom sort of situation. You're looking at RSI saying to yourself, it's at a historic low, all-time low, with a questionable bull div on the 2-day. It's also got a bull div on the daily pretty clearly. It's going to be hard to beat the all-time low in RSI. So all this is just a giant bull div right now in high time frames. It can certainly make a third lower low. That's almost better if it does. You get this like 3 drive mentality. The third low is a higher in RSI. We've seen that plenty of times. Certainly possible. That's when you like to see capitulation. We'll see what volume does. Alright, I've said enough. Like, dislike, comment, share, subscribe. Hit me up on Twitter, Telegram, and happy trading.